What's up, my fellow traders? Hope you all having an awesome weekend. And what a week it was for nat gas, gold, and all the other commodities we've been waiting for. And we had some nice big moves out of those commodities, and which is what I'm going to talk about in the second part of the video, where I'm going to do the analysis for nat gas, gold, silver, and crude oil. But before that, as always over the weekend, I want to give you something to learn that will help you in your trading. But also, before that, I have an announcement to make that INFX, one of my partner broker, is conducting a webinar in cooperation with me, Money Marcus, where we will learn and understand how the market reacts in some certain conditions. You will learn about the market dynamics and correlations as well. For example, if you are trading crude oil, how you look at the Canadian dollar. If you are trading dollar index, how you look at the gold and the other instrument that correlate. So that is what we're gonna learn in the webinar. You're gonna get tons of knowledge, and you will also get a chance to join priority group, and the minimum deposit requirement will be reduced dramatically. So it will be fun. I'll be there as well. And if you want to register it, I'll put the link in the description. All you need to do, just click on the link and you will come up on the form right here on my website. All you need to do is just add your first and last name, your email address, and in a message just type I am interested. That is what you need to do, and just click on send. So once I have your detail, I will send you the link of the webinar on the day, so that we will all join and learn and get stronger with knowledge. It won't be a public webinar, so make sure you register that so that you can get a good and lots of benefits with that. So it's totally free. So in the first part of the video, I'm going to show you how we can trade smoothly if you follow the rules. I'm going to show you how we had some insane amount of entries from the last 2 weeks according to the reports I've been sending to the members. I'm going to show you the forex pairs, I'm going to show you the commodities, I'm going to show you one indices as well. And I will also show you what happens when I was waiting for my price to hit the level of resistance and we were looking for an entry, but instead the price breaks above that level, and how you can enter. And in that scenario, that is what I'm going to talk about. I'm also going to show you some entries that happens last week from last 2 weeks that will help you to understand trading more efficiently, and that will also encourage you to learn trading rather than just guessing in the market. Because all these entries I will show you, you listen to me every day talking about those entries, and none of them are out of any sort of guesses. So let's start with our forex report, which I've sent to the members. Now, a very important thing that in trading, it is very important to be patient. Now, if you are looking at the particular pair to take your trades, and let's say you wanted to enter at the area of value and price is still a little bit above, and you say, yeah, that's fine, the price is now about to hit the area of value, let's enter my trade here, and if the price pushes lower, I will enter another trade. Now, that will be a lot of stress if you do that, but if you follow the rules, let me show you how I waited with patience and how I sent these reports to the members to wait for the area of value. Now, this was a report sent to the members right here. If you see CAD, NZDCAD. Now, this was a report sent to the members on 18th of last month. Did I get a fear of missing out, or did I get panicked that now price is almost there, let's start buying? No, I did not. Instead, what I got an opportunity to enter my sell trade because we are still pushing lower. We still did not hit my zone, and why not entering a sell trade and just go for a little scalp till the price hit my area of value? Exactly that has happened. Now, we got an opportunity to enter this trade. So I waited for the price to hit my zone, and as you can see, a nice double bottom pattern that pushed the market massively. And imagine if you would have managed this trade, how much money you could have made just by following your rules. Now, right here, let's look at the crude oil trade. Now, this was the zone I've sent to the members. Let me show you. Right here on 1st of October. So I've already informed the members that we have two zones for crude oil. One is above, and as you can see, the target has been hit for that because this was the zone, the red zone I have sent to the members in my previous report. So now we were looking for a good bounce from a minor level. Right there, I've mentioned that we have a minor support, and which I'm paying attention for small scalp and expecting a bounce out of. So a small scalp was expecting, and I was not expecting a very big bounce because it was my minor area of value. So the rule was only enter your buy trade for a little scalp right here, and according to the ATR, it was telling us that I'm going to push up $1 according to the volatility. And what is that? We got exact $1, actually more than $1 push up, and then the price falls down, and we were prepared to take our buy trade from this area in green. I've already mentioned to my members where the price is currently at today. So as you can see how nicely by following the rules, trading look so easy rather than just try to sell at the top and try to buy at the bottom, or just by looking at the overbought and oversold you start buying and selling without other technical confluences. Next one we have wheat. Let's look at this commodity. Right here we were prepared to enter our trade from this area of value, and I've already mentioned my members that we'll be looking to enter our buy trades from the counter trading zone, and price is now inside. At that time the price was inside the counter trading zone as a report sent to the members on 1st of October. The same report right here. We've been waiting for the price to hit, and as you can see the price did bounce up from my area of value, but I did not enter this trade because I did not see any sort of entry. It might work sometime, you just start buying when the price hits your area of value, and then but it is very important to see some sort of confluence, which is your buy signal. You look at the overbought oversold situation in the RSI followed by bullish candle and all the technical factors. If you're going with your analysis, only then I look for my entries. Even though the price pushed up, I did not enter this trade, and that is what you call discipline. You need to be disciplined to take your trades without guessing in the markets. Then we have gold. We've been waiting for the price to hit the zone, which the price just hit today, which I'm going to talk about in today's analysis. And as you can see, exactly from where we predicted, the gold has bounced up and is bouncing up, and I'm going to go through full analysis in a second part of the video. So that is how we wait with patience without just trying to enter the trade, looking at so many red candles, and now you think that price will now head higher. And what happened is the price hit towards the area of value where all the professional traders are sitting and waiting to take their trades, not guessing, just looking at so many candles, red candles, and then you look at the oversold in the RSI and you say like, no, the price is definitely going to push up. No, it's not going to work like that. Again, you need to see some confluence, some technical factors to take your trade, and price action talks with you that if it's going to push up or not. I did not see any condition here. It is a valid engulfer, but it did not happen at the area of value. But now we have a good situation, which I'm going to talk about very shortly. Then we have this pair, which is Canada CHF. As you can see, the report was sent last month, and right here, CADCHF, the price hit the area of value, which is 28th of September. So we waited a couple of days before we enter the trade, not just by looking at this bearish candle we start selling, but instead we waited for the price to reach my zone. Once the price was in the zone, I prepared my members to take their trades, and as you can see that I've already mentioned that price is now currently inside the major trend continuation resistance level, and I'll be looking to enter my sell trade on a smaller time frame from where we'll be looking to enter our sell trade. Now that should be a resistance level, not support zone. Sorry for that, but I'm sure you understood by looking at the sell trades from this area of value right here. As you can see, a nice hit of take profit. I used a fixed target of 1.421, but if you could have managed it, that would be a good take profit hit even till the level of support right here. We do not have any support here for this pair, but could be a very good take profit if you would have managed this trade. That still gave me a good amount of profits, a better reward to risk ratio. Let's look at SP500 indices report I've sent to the members, and I've already mentioned there that price is currently pushing lower and now pulled back to the level of previous resistance that was recently broken. Price recently hit the area of value, a valid trend continuation resistance level, and I'm now looking to enter possible sell trade with conditions. Now the price was here on a daily time frame, but if you go back on a 4-hour time frame, we had a nice push down, pull back, a bearish engulfing candle that happened at the area of value, that happened below 50 EMA. We have a bearish candle, and all these technical factors going with my analysis. The price is pushing lower, so we are good to go short. And as you can see, just by following the rules, how nicely we can grab some profits. That is just 2 weeks of trade. We had some losing trades as well, but in the end I came out profitable. And right, I want to show you a losing trade as well. This was the zone I've sent to the members, and we've been waiting for the price to hit the zone to take our sell trades. Now, did you see any sort of sell condition here? No, we did not get any sort of condition. So why entering the trade blindly? Instead, the price broke above. I was prepared to take my buy trades because once a zone is broken, when the resistance is broken, that turns support. So I was only interested to buy from this area rather than selling from this area. So conditions changed. Instead of taking my sell trades, I was looking to enter my buy trades, and as you can see, we did not have any buy condition here, no buy condition here, but we had a new high, we had a pullback, we have a bullish engulfer that happens in my area of value. Everything was going with my analysis, but unfortunately there was a stop loss hit of 36 pips, but that didn't hurt me because we had a good winning trades as well, and I've been taking some other trades using my own strategy, and that gave me some insane amount of results. If you follow your rules and disciplined, then trust me guys, you can able to make it in a trading world. All you need, be patient, be disciplined, because in trading, when the market is open, all we want just to be in the trade all the time, just want a thrill, and we forget that we are using the hard-earned money, and that is the real money which you are putting in the market. So that is why it's very important that you understand the market, you have a good knowledge about the market before you invest your hard-earned money. Now these were the counter trades where we enter the trades from the area of value. What happens if the price is now in between the zones right here? If the price is in between the zones, we are only looking for the pullback trades. Right here, this was a trade alert I've sent to the members, and as you can see, the price was trending lower, and all we were waiting for some pullbacks, and as you can see, a good take profit hit here. Then we have no condition, then the price made a new low, we had a pullback to 50 EMA, we had a bearish engulfing candle, and that was my entry, and that would have hit your take profit with a spread right here, because this pair normally had big spread, but that could have hit your take profit right here, even though it pushes up and then pulls back down and still hit your take profit. And that was just a pullback entry in a downtrend, and that is how I take my trades. We also had a pullback entry right here. This was a trade I did not send to the members. This was a trade I took myself, a nice winning trade. If you are my student in MMTA, you know this is a valid pullback entry. And then we had another low, we had a pullback, we had a nice bearish candle, and that was another winning trade, even though the price pushed up, and that was a moment of panic as well. And remember guys, if you are in the trade, want to set your targets, there is no need to be scared of, because you know that you have taken a decision. If you are under your risk capital, you are not overexposing your risk, then there is nothing to be scared of, because a worst case scenario will be hitting your stop loss. And then we had a trade alert here on net gas. I've sent this trade alert to the members, and what the confluence is I was looking at, that I was looking at a nice trending market. I was looking at the prices trading above 50 EMA. I was looking for the good pullback followed by bullish engulfer right here, and that was some good take profit hit out of net gas as well. And that is how we enter the trending market. That is how we take our trades from when the price is now above the level and in between the zones, and only then we are looking for our pullback trades, the trending trades, when the price is trending upwards or downwards. See how simple it is if you follow the rules. Some rules if you are disciplined and if you are patient. The other psychology of the trader is that you are sitting there waiting for your setups, but on the other hand, some of your friend, he might be a very impatient trader, comes to you and say, hey, I made this much money here. Hey, I put $500 and I made $700 out of that by risking everything. But that can happen once or twice. In the long run, trust me, you will blow up your account like that if you are not using a proper risk management. And if you listen to this type of people 2 or 3 times, you will be like, why not do the same thing once, make lots of money once, and then I will be disciplined. No, you can't do that, because what if the price goes against you? Because that is just a guess, and there is nothing like guess in the market. There is no hopes in the market, because you're competing with some big fellows out there and you want to ride along with them, not against them. So that is why we have this order block zone, so that once the price hit the zones, we want to enter the trade from this area of value so that we can ride along with them and take some profits with them, because we retail traders look at the technicals, and these are technicals factors we need to look at, some zones, trending market, and if you master that, if you master the emotions, then trust me, it is not hard to make it in a trading world. And with the right education, it will give you that edge in the market. So I hope you have learned something out of that, and I hope you implement that in your trading by being patient, disciplined, and not getting greedy by not taking your profits or even not cutting your losses and just hoping the price will come back in your favor, and that can blow up your account very easily. With that being said, let's start our analysis starting with nat gas, gold, silver, and crude oil. We're going to start with nat gas, Owanda, and I'm going to go through NEMX platform. I'm going to give you the next zones and what to expect from here. Now, let me show you what I've said in my last video so that we can understand conditions and entries. At this point, what I'm looking at, a good condition for sell. I'm not looking for buy trades anymore. If you see, we have an overbought situation as well. Now, if I see a green and red candle, in that case, I have my sell signal. If we have no sell conditions, let's say we have no bearish engulfer or we have no double tops, in that case, what can happen is we can get some pullback of few red candles followed by a bullish engulfing candle, something like this. If we have something like this after a pullback, I'm going to enter my buy trade, and my buy trade will be till this recent high. And remember that I'll be looking for pullbacks. I won't be holding on with my trades as we are still intact with an uptrend. We can just expect some pullback. That is enough to hit our target before the price will head higher. Nice one. So if you remember, I've clearly said that if we have no conditions, we have no entries, we are not going to enter the trade. We had a pullback of 2 candles. All I was waiting for a bullish engulfing candle. We have that here on this platform, but that is also not one of my valid condition. But that is totally cool. When there is no conditions, we are not entering our trades. So for now, if you see, the price has now broken above the level of resistance, that will now turn a level of support. Now we have a zone above, which is not a major zone. We have a zone above right here. It is also not a major zone. These both zones are a minor zone, but sometimes minor zone reacts nicely, and it did in the past as well. We have a major zone right up there, which is here, and that is very far. I know I'm not looking at that level for now, but I'm just telling you, we have a minor zone we have to go through to get to that level, and we also have a zone right here, a good level which I'm going to mention in my upcoming videos. For now, what to expect from it. As the zone has been broken, we have a good momentum, and now for aggressive traders, of course, I'm going to use my FIB tool like this, and that is also aligning with 1.618 retracement, which is also our next level of resistance. So for now, for aggressive traders, we can get a pullback to 50%, or if you remember, if you follow me from a couple of months, we can get a pullback to my buffer zone, and my buffer zone is 50% retracement that goes down to 25% retracement. So we can change the color right here, as you can see the number. So with aggressive entries, we can get a pullback, a possible pullback to my buffer zone, and then we can get another push up back to 1.618 retracement. That is something for an aggressive trader, and that is what I call an aggressive entry, because the zone has been broken. Now I'm going to use this zone as my trend continuation zone for buy trades only, not looking for sell trades, because now we are above this level. And let's say we have another green candle here, or let's say the market opens in gap. In that case, I will push my FIB tool to the next candle. So once I start to see a pullback, I will keep my FIB tool as it is. So let's say if we have a next candle closed below, I'll keep my FIB tool as it is, and I wait for the pullback to come back in the buffer zone to take my buy trade. So that's what I'm looking at for aggressive traders. Otherwise, so less aggressive entries, let's say you don't want to enter aggressively, you want to look for an extra confluence, which will be pullback of few candles, hit of the zone right here that has been broken. It is 2.961, goes up to 3.063, and I want to see a bullish engulfing candle. If we have that, we have a very good signal that price will push up, and I will use 1 ATR for my initial target. ATR is the number. If you see right up there, you see the high volatility in the market. ATR was only 3 to 4. Now the volume has pushed higher, and we have an ATR of 5, and on daily time frame the ATR coming up as 12. So we have a good volume in the market. All I'm expecting some pullback, and on 4-hour time frame I'm looking for my buffer zone. I'm doing that again on 4-hour time frame. So from high of this candle to my area of value, something like this. So this is your buffer zone, and I can see a pullback has been started. So I will have my buffer zone like this, and I will wait for the pullback to my buffer zone, and that will be my aggressive entry. For less aggressive trader, we want to see a pullback of few candles that can happen above 50 EMA anyway, followed by bullish engulfing candle that can happen at 20 EMA, that can happen at 50 EMA with a big pullback, or that can also happen somewhere in between the zone, followed by bullish engulfer. So as you see, I want to see a reason to enter my buy trades. If there is no reason, we are not going to enter our buy trade, and that is for less aggressive traders. For aggressive traders, if you want to look for aggressive entries, I use my buffer zone to take my entry if I want to enter in a less aggressive way. Now if the price continues to push up, then it will hit the next level of minor resistance. That can be a good level as well, because as you can see in the past, that level has acted as a good level of support and resistance. So that is why I'm looking at this level. This level is 3.298, goes up to 3.433 here on O1. I'm going to go through neemexandcapital.com in a very short while, and this is the zone from where I want to look for some pullbacks. If we have a bearish engulfers or a double top entry pattern, if you remember, I've said that if we have an entry here, I will look for the pullback before the price will head higher again. Again, the same rule here. I want to see a pullback here. That will be enough to hit your targets, and then we can get another push up back to the level of resistance. As we are in a very strong bullish momentum, I'm only expecting some pullback from the area of value, which is right here. For now, I'm just looking for my buy trades, either aggressively or either with a pullback followed by bullish engulfing pattern. Here on capital.com, exactly the same. I'll use my Fibonacci tool like this. I will use my buffer zone, which is my 50% retracement till 25% retracement for aggressive entry. For less aggressive entries, I will look for my pullback, follow my bullish engulfing candle, and keep on taking longs. I look for the retest of this zone, which is a number right here in blue, from where I will looking to enter my buy trades. Now if the price keeps on pushing higher, I will use a zone above, which is right here 3.561, goes up to 3.747, a zone from where I'll be looking to enter my sell trades, just a pullback if I get a condition like bearish engulfers or my double top entry patterns. Everything is same I've just explained. Here on NYMEX, the zone that has been broken is right here in blue, and the zone above, which I'm looking at for my sell conditions, is right here 3.577, goes up to 3.816, a zone from where I'll be looking to enter my sell trade. For now, I'm just looking at buy conditions with a pullback, either with a Fibonacci pullback or a simple pullback of few red candles followed by bullish engulfer with a less aggressive way to enter my trades. So keep an eye here. Once we have a conditions, we are good to go for our entries. So next one we have gold. Gold is now in the level of major resistance, and we also have a good bullish engulfing candle. Now that is also one of my entry condition. We have a bullish engulfer right here, but that is a very big candle, and that can be entry at the close of this candle. If you have seen my last video, then I've said that I'll be looking to enter my buy trades with conditions. Now if I see this type of big candles, what I personally do for commodities, I use my Fibonacci retracement, something like this, and I use 50% retracement for my buy limit order, and then I use one ATR for my target, and ATR at that time is 8, and that $8 will be my target. So that is what I'll be looking at. I'll be entering at the 50% retracement. That is my own choice, and if you want to enter at the close, that is totally up to you. But I can see we have a valid condition for gold. I'm now expecting a push up at least $8. If I have a pullback, I will enter here, and then I will look 50 EMA closely, because I'm expecting another push down from 50 EMA and then a push up again. So I'll be waiting for the price to give me a pullback for my entries, and I will go one ATR for my targets. Here on silver, it has pushed up and it did not make it to my zone, but that is totally fine. Like I said, discipline is very important. It can now pushes higher, and we have a 50 EMA right here. Now 50 EMA also act as a good level of resistance, so we can get some pullbacks from 50 EMA. If not, then we have a level of major resistance, which is 22.02, goes up to 22.57, from where if the price pushes higher, we can get some pullbacks from here, and then a possible push up if the price wants to reverse. Otherwise, I'll be looking at this level closely for my sell conditions with bearish engulfers or double top entry patterns, or 50 EMA if I see a red candle, bigger red candle. In that case, we have a sell signal and price can likely head lower. So that is why I won't be holding on with my gold trades, because if we get a pullback from silver, gold will also give us a pullback. It might hit your take profit and give you a pullback back to the zone, and silver can come back in my buying area. So that is what I'm looking at for gold and silver. The last one, we have crude oil. So as now price is in the level of major support, we have an engulfing candle right here. Like I said, I want to see a complete engulfing candle including a wick. That can be an entry as well, and target can be $1.7. That is what the ATR is telling me. But like I said, if I see a weak signal, especially for commodities, I wait for the less aggressive way to enter, which is a pullback and a possible formation of double bottom. If I see that conditions, I will enter my long trade. For now, that is a valid condition for aggressive trader. Again, this is a weak entry, but that can also push higher. I personally wait for the double bottom. If I have that, I will take my long trade. Prices now in a buying area, and I'm expecting some bounce here till 20 EMA. If broken above, then it will hit 50 EMA, which is very likely if we ever broke above 20 EMA. So that's it for commodities, guys. I hope you got a value out of today's video. If yes, hit the like button for me. It really helps me in a YouTube algorithm. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.